Welcome, everyone, and thank you for joining 5 Reasons Why Self-Employed Incorporate Their Business. My name is Uribar Joseph. I'm the COO of Formations, and I will also be your moderator today. We have a great webinar planned, but before we start, a few housekeeping notes. First of all, this webinar is being recorded. The link to the recording will be sent to you by tomorrow alongside a copy of this presentation and all the links and information that you will find inside this presentation. We have a special offer for our webinar attendees today, and we will go over it throughout the webinar, and we'll mention it again at the end of the webinar, a special offer for all the attendees. We have people managing the chat and the Q&A module, so please feel free to use those to submit questions or to make any comments. We ask that if you have questions for our speakers, please use the Q&A module. That is the module that you can click on and submit your questions. It's easier for us to manage that one. If you have specific comments, you can use the chat, but for the most part, please use the Q&A module. At the end of the presentation part, we will hold an open Q&A. You can submit your questions at any point of the presentation, and we'll do our best to get to all of the questions. Questions that we can't get to, we will also do our best to post answers either through the chat, through the Q&A module, or on our blog at the end of the presentation. After the webinar, you will be sent to a short survey about the webinar. We would love to get your feedback so we can improve our webinars. We're here every Wednesday at 11 a.m. and we read your feedback religiously to see how we can improve our webinars and produce better content and more information for you. Today, we will be covering why your LLC sucks and the 5 reasons to move to an S Corp. We will explain what forming and being an S Corp means and why it's much better for you and your business to be an S Corp than being a sole prop or just an LLC. We'll also be covering the most frequently asked questions on the topic, and we'll have some time, as I mentioned, to answer any of your questions. So once again, please submit them through the Q&A module. Our speakers today are Shahar Pleener, founder and CEO of Formations, Aaron Meyer, our head of customer success, and Brian Ware, our resident tax expert. Shahar is a tax and accounting expert with over 15 years of experience in the field. He has managed thousands of clients' tax returns, business structures, and S Corps. And before he founded Formations, he built a successful tax accounting practice in Seattle, serving over 3,500 customers. Shahar, good morning. Thank you for joining us today.
Good morning, Uri. Pleasure to be.
Aaron has worked as an accountant for over 10 years and is certified on numerous fintech platforms. He has specialized in maximizing efficiency through leveraging cloud-based apps while maintaining compliance to regulations for city, state, and federal agencies. In his free time, he enjoys playing guitar and yelling at the TV. Hello, Aaron.
Hello, everyone. Glad to be here.
Brian is an experienced tax consultant with a demonstrated history of working in the accounting industry and educating professionals new to taxation. He is skilled in solving complicated tax reports and in risk management. Brian spends most of his free time working in his garden and enjoying the outdoors. Hello, Brian. Thank you for joining us today.
Good morning. Glad to be here with everyone.
Before I hand it over to our esteemed panel, we would like to start with a short poll to learn more about you. I will start the poll now. You should see it coming up on your screen. There are 3 simple questions. Please take your time to answer all 3 of them. It helps us to tailor the content better to the attendees today. I'm going to give you about a minute to answer them. Okay, I think most people have answered them. I'm going to wait maybe 10 more seconds for the last few to answer the questions, and then I'm going to share the results with our panel and hand it over to Shahal. So I'm going to end the poll right now, and then I'm going to share the results. You should see it on your screen. So primarily sole props and some single member LLCs. That's great. Right now, you're in the right place. This webinar is for you guys. And then mostly no employees or just a few, and then a somewhat of a normal distribution of income. Shahad, do you want me to keep the results on for a little while, or are we good?
No, I think we're good. It's fascinating every week to see the poll results. So I'm good with that. I hope that my mic is okay and everybody can hear me well. And happy Wednesday, everybody. It's our first webinar for Q3. So welcome Q3. I'm excited about Q3. It's the second part of the year. You know, I hope that everybody is kind of out of their financial/COVID coma for Q1 and 2. It's time to own our destiny and make an impact, you know, for 2020 and close the year strong, starting, you know, the second part of the year. So I'm super excited. I'm happy to have Aaron and Brian with me on the panel today, which means I encourage you all to ask questions. This is why we are here. We are here to educate you, to give you a lot of information. Some of it's some technical information, so bear with us, trust the system. We want you to get used to these financial and tax and accounting terms, but ask questions. This is why we have the Q&A module. We will answer questions as we go, and we'll answer questions more at the end. So this is an interactive session. Feel free to interact with us. I think that before we start again, July 15, in a week from now, at the end of the regular tax season, really important date. If you haven't filed your taxes still, you know, IRS postponed the regular April 15 deadline to July 15. And here we go. July 15 is just knocking on our door. It's next week, next Wednesday. Make sure to file your taxes. If it's not ready, file for an extension, pay what you owe. If you owe the IRS, there are no extension to pay. So make sure that you pay, and assuming again that you prepare your cash flow, you know, for whatever you owe, but take care of that. Make sure that you're not filing late. If you need an extension, take care of it. One question that we dropped, by the way, from the poll, but I just want to make sure that people are still aware, the PPP, you know, government is literally gifting small businesses, self-employed, free money. The PPP, the payroll protection program, is still available. There's about $100 billion more of money from the government waiting for you to apply, submit, and receive. Everyone that will submit the request for PPP will get funding from the government. And if you know how to use it smart, based on the IRS and Department of Revenue, Department of Treasury guideline, again, this will be forgive, which means you will never need to pay it back. So again, ask us questions about the PPP and also about the idle, you know, the distress financials by the SBA. But this is free money that we ask you to apply for. Again, and if you apply, again, this is money that can help you to pay your taxes, you know, coming July 15th. So this is the two updates that we want to share with you today. Another area that Brian and I discussed just before, you know, we start, it's the COVID-19 retirement exclusion. The IRS is providing a lot of relief, you know, from people that need to tap into their retirement plan, their IRAs, their 401ks, allowing you to get the money out without the penalty, without the need to pay the taxes for the next 3 years. So there's plenty of plans at the moment available by the government and by some other financial institute to allow you some relief of cash flow to survive these hard times. Although, again, as I'm excited about Q3, we see the real estate industry and some other industry that we follow really closely coming back, people doing transaction, people are getting paid. There is really, in my opinion, positive feedback to the freelance and to the self-employed community, which give us, some hope that we can literally, make 2020 a great year. Which come back, to the 3 statements that we open up every session. 1, believe in yourself. You're the one that create your own reality. So make sure that you're pumped with positive energy. Believe in yourself that you can make, great income in 2020. Believe in your business. Take care of your business like a business. It's not a hobby, and we say trust your business is trust it also with an S corporation, with a great foundation, of how to save money. And also at the end, trust the system. Department of Treasury and the IRS giving a lot of great tools for self-employed to make more money and keep more of your hard-earned money in your pocket. Follow our guideline today and you'll get a lot of great tips of how to make more, and keep it in your pocket. So again, it's some of technical terms, but again, trust the system, trust our cadence, and here we start. So again, I think that what is really important for people to understand is that when you consume information from expert, when you get knowledgeable about a topic, again, this is usually makes you better. And then tax court judge, many years ago said that in the US, there are 2 tax systems. One is for the informed and one is the uninformed, and both are legal. It means that when you know stuff and you consume education, you probably will be better. To use the IRS system with S Corps and retirement and some other mechanism, it's 100% legit and legal. It's there for you to use. So again, the poll show us 92% of the participants on today's webinar are still sole proprietors and single member LLC. If you're also the one that actually 80% are making more than $50,000, you're bleeding unnecessary taxes every year to the IRS. And this is what we're going to teach you today. We're going to educate you and teach you how to basically keep more of this hard money in your pocket. Brian, when we jump directly into the first topic, LLC, how do you form an LLC, what it means, and why it's so important?
Yeah, of course. We get this question a lot. So when you incorporate an LLC, it's your first step in legitimizing your business. So what happens is you file your articles of incorporation with the state that you're doing business in, and it's you telling the state, hey, I'm here, this is what I do, this is who owns it, and what's going on with my business. And once you go forward with that process, it kind of opens your world up to a lot more options. So it's really easy to get an EIN, which is an employer identification number, as well as get loan products and other various items. So an LLC is the legal designation. It's the formation around your business that elevates you beyond sole proprietorship to the next step, which is an actual business. It's really important to know that your LLC might be taxed different ways depending on your state or the types of ownership are. And I know that Shahar has some really good things to talk to you about that.
And this is, I think, why people need to understand that going into business doesn't mean that you need to be all in at once. Some people, again, understand that they're making money and there is a way how to get into this perfect profile tax structure. Some needs baby step. The first baby step, LLC, it's a must because as Brian mentioned, one, it's a very flexible entity to run your financials. You can choose a different type of tax, how the IRS will tax this LLC. But what we want informations in today's webinar is not to give you too many options. We want to walk you through the happy path of what you guys need to do in order to be the most efficient without giving you too many nuances. And I think that if you want to run your business in the most efficient way, LLC is not enough. LLC is the one step to get into your financial freedom, filing for an S corporation, this is what will put your business in the most suitable, tax structure to run your self-employed activity. And the reason is because S Corps, it's the only entity, and we'll discuss more and more in the next very, very entertaining, 30 minutes about how each of those nuances of an S corporation really impact every aspect of your business. So again, we get a lot of questions about what's the right entity structure. There is a confusion. I heard it by my accountant or by my friend. I can tell you again, I'm practicing taxes for the last 15 years. I am seeing taxes via different lenses than a regular CPA. I'm looking through the lenses of an entrepreneur, of a self-employed, of a business owner. And I can tell you that the world in taxes, there is only one and only business structure that will benefit self-employed making more than $50,000-$60,000, and this is the S corporation. And this is why it's so important for us, to share with you this information today. So again, by no means your LLC suck. Again, if you're still an LLC or sole prop and you think that you're in the best entity structure, there's no other word to tell you're suck, and you bleed unnecessary taxes every day. And this is because LLC is just making kind of the entity legal structure, but it's not protecting you from taxes. The only entity that really protect you from tax and enable you to get into this amazing benefit that we'll speak in the next 30 minutes is the S corporation. So the conversation today is pure about why incorporating your business is great. So I encourage you all to ask questions. Again, there was a warning at the beginning. Some of the terms are technical. Don't be afraid of this technical. Get into this learning zone. Feel comfortable around those terms. But if you still have questions, ask again and again and again until you really understand why S corporation is great for your business. And again, we are getting into business because we want to make money. We're getting into business because we want to maintain our financial freedom, but also we are self-employed because we're not hireable. We're not used to the regular workforce kind of, cookie cutter environment. S corporation will provide you the freedom to do that, and it's saving you thousands of dollars in taxes just because self-employed are exposed to self-employment taxes. As someone who's making money as a 1099, you're exposed and you need to pay Social Security as an employee, as an employer, both sides, the 15.3%. S corporation, it's an entity that just put a wall between the employee and the employer. So the employer, as the business, is not paying self-employment taxes, only the employee, but it's just on portion of the work that you're doing for the business. So this is like a great example of how an individual tax return looks like, just a comparison. And you can see that we took an $80,000 1099 earner, single person, as a Schedule C. At the end of the day, his balance due to the IRS after a variety of deductions is still pay about $19,000 in taxes, while the same person that moved into an S corporation pay only $10,000, which means $8,700 of tax saving in his pocket. Think about how much is it for a real estate agent or for a freelance to keep $99,000 of his hard-earned money in his pocket. How many houses do you need to sell? How many hours of client you need to bill, assuming that you guys are charging $150 an hour, $200 an hour. In most cases, this is a lot of hours that you can basically get free into your bank account just because you decided to go with a more efficient tax structure like an S corporation. So again, an S corporation in general, very familiar entity on the corporate world. The small and medium business, probably 45%, are using the S corporation structure. Less than 10% of the self-employed market are using S Corp, which means what Formations is trying to do via education is try to democratize and try to bring the concept of an S Corp to a community that don't use it, but can highly benefit from the usage, and try to show you that although there's maybe perception of complexity around it, it's super simple, both the concept to understand, but also the actual steps to get into. So we are serving clients, from different industries. Stephanie is one of them. She came to us in 2019, already prepared 2019 tax return on TurboTax, the same as she's been doing for the last 10 years. She's a top producer of real estate, making a lot of money. And then she came just before she clicked send on her TurboTax return to the IRS and said, Shahar, hey, just help me to understand what's going wrong. How come I'm making so much money, but my net income is just not as I expected? And again, and few minutes later, very easy for us to do this comparison. I said, Stephanie, it's just because you're a sole proprietorship for so many years, and because we can turn, the ball around and convert you into an S corporation immediately, we'll be able to file her taxes still timely, few months back, and save her $14,000. This is the amount of money, the magnitude that you can save moving your business into the right entity structure. Now, tax savings is just one component of the S corporation journey. As Brian mentioned at the beginning, again, when you choose, the right entity structure and you convert yourself into an S corp, the S corporation become like enabler. It become like this entity structure that enable you to get into other areas. And the number one area that we love, for self-employed is the benefit, because this is money benefit that you can keep in your pocket or can keep basically in some savings for you and your family. So think about the regular W-2 employee, the Microsoft employee, the Amazon employee, going into his first work day and sitting in front, the enrollment, orientation day, try to onboard into the Amazon, Facebook, Google, employment. He start asking, all of these questions. Do you want to participate in this plan and that plan? And the corporate America offering, the employee a lot of ways how to save, from the first dollar that is making. This is what Formations is trying to do for the self-employed. We want you to feel, and even more, the same feeling. When you onboard into your own S Corp, you have the choice to choose, all of these amazing 401k, fringe benefit, HSA, FSA. And again, ask us question. If you don't understand what 401k means, ask us. Google the benefit of the best retirement plan on the planet at the moment. What fringe benefit you as an employer of yourself, your own employee, can offer yourself, from paying your student loan payments, to participate in life insurance, to choose the reimbursement of expenses from the business, to use the HSA and the FSA mechanism. One is for health saving account, and one is to pay for daycare expenses for those of you that have, kids younger than 13. So when we combine all of those things together, you can see that the savings is not just on the tax. When I combine the tax savings and the benefit savings and the right health insurance plan, now this is the $15,000, a crazy amount, over $1,000, $1,200 a month that we can still keep in your pocket. This is kind of going back into the Stephanie discussion. This is how we monetize, the benefit of an S corporation. It's not just the tax saving, it's just the tax saving and the enablement to go into those amazing Fortune 500 benefit. Before we jump into topic number 3, which is a little bit more kind of, the limit liability and the personal protection, Uri, I see tons of questions coming into the chat. Is it make sense to stop?
Yeah, I think we're gonna address a lot of these questions as we go along, but maybe a few quick questions that came in that are maybe relevant right now. One, we mentioned the story about Stephanie and the late election on S Corp. Is it still possible to start an S Corp for 2019? Maybe you can answer that for some people who might be interested in that.
Yeah, let Brian. Brian is the
Of course.
late S selection expert. Brian, you have a good news?
We have good news. As long as you have a legal entity, so this is an LLC, even a partnership or a C Corp, you are able to go back up to 3 years and do a late S election. So you could still do an election for January 1st of 2019, as long as you had a legal structure behind you. If you haven't had a legal structure, the IRS doesn't allow you to go back and date an S election prior to the legal entity being in existence. Sorry, got lost in my words. So you want to make sure that no matter what, if you don't have an LLC yet, get one. Even though they suck, we want to make sure you have one so that you have the flexibility later. So that kind of answers the question.
So I want to make sure. So if I have an LLC that I open up somewhere around 2018 and 19, and I never filed the 2553, the S election, I'm golden. I can go back to the beginning of 2019 and file a late S election and save again. Maybe not all of the self-employed, maybe there'll be some concessions around it, but I can still save significant amount as long as I have an active LLC before 2020.
Absolutely. And there's just a special way that you do it. So it's a little bit different than normal, but we can handle that without any issue.
Perfect. Great to know.
Maybe one more question, Shahar, and we can get to it maybe later, but I think it might be a good opportunity to bring it up now. There was a question on the Q&A module of refinancing your home. We spoke a little bit about giving reasonable compensation. Does that change as you consider showing a level of income to certain financial institutions or for different reasons? Can you play around with how much you're making on the books, quote unquote, in order to get some benefits out of a higher income?
Sure. So we all know that when you're a W-2 employee, your life is way easier. You know, when you go to refinance via a lender, the lender will see the W-2 income as a protected income, qualify, you know, for the underwriting process. This is what an S corporation is doing for the shareholder. This is why we separate, you know, the distributions, the K1, you know, from the W-2. And the W-2, this is how much you pay yourself on an annual basis, but we determine these payments either monthly or quarterly, which means if someone is going through a refinance process and want to make his statement stronger by bringing more income via W-2, which means, again, you will have to pay a little bit more taxes, but again, the refinance, this is the higher, you know, purpose of the reason, 100%. We can increase the W-2, we can create more taxes paid purposely, you know, self-employment taxes, but the idea is just to make your application stronger. So again, this is one of the reasons we love to play with S Corporation, because S Corporation is literally a very flexible entity that we can define kind of the financials almost on a quarterly basis. And I think it's a great kind of topic to move on into this personal asset protection, because the single member LLC, which again, suck from tax perspective, but this is the entity that we want to run with to create your limited liability protection, is just making sure that you, as an employee of the business or the owner of the business, is separate for limited liability protection. It's a separate legal entity. You use a EIN number, as Brian mentioned before. You're not exposing your social security either identity theft or just because, again, you don't want to use your social security with your providers or people that pays you money. But the personal asset, it's also about the fact that keep in mind that we ask you to have a separate bank account for the LLC. So we stop commingling business and personal expenses. We ask you not to put personal assets inside your LLC, which means if you have rental property, or if you have some art, or if you have some other assets that are not belong to the business, you can hold it on a separate trust or an LLC or a different corporation. Your entity that run your own business should be you, yourself, your business expenses, some business assets. You know, if you have if you have a car, if you have like a client list, if you have, you know, your computer, your laptop, and if this is part of your business, yeah, keep it on your business books. But the idea is that how do we separate, you know, the corporation from the personal? It's a great strategy how also to put like a credibility. You know, your business is separate. This is your business entity, and your personal, this is where you actually pay yourself. This is where you do the fun stuff. This is where you take care of your pets and the kids and your personal care. And then it serves a great purpose for someone who's self-employed running your own business. So we covered kind of the main 1, 2, 3 aspects. So I remind you again, the tax savings, this is one which will help you to keep more money in your pocket. It's the benefit, which is will keep more money in your pocket, but also will take care of the well-being. You know, it's the pension, the retirement, the savings, the health of the family, the IRAs, the Roth, you know, the traditional, the one that you can pay taxes today and grow free for the future, the one that you defer the taxes today because, you know, we can reduce the taxes today, and then the limited liability protection. The next two is really about how to treat your business as a business. One is we're adding a lot of credibility into your brand. You know, I'm a business, I'm a separate entity. You know, I can end my name with an LLC or with an Inc. It's just a different level of mindset. You know, when you get into the mindset of dressing up in the morning, getting out of your PJ and go to work, this is the same as we feel as business owner, the difference between a sole prop or a hobby business and a corporation. When you dress up as a corporation, you have this almost like a mental requirement, you know, to operate and put accountability, you know, for your performance and put goals for your business financials, because now you have this cost to maintain the business. So we feel and we see the difference when people move, you know, into the business world, how their approach to the business change, how they believe more again in their business, how they believe in themselves. And because you're interacting with the system, you believe that actually the system, you know, can save you money. And now they can see, you know, the savings in their pocket. It's a lot of positive influence. And this is what we need on those, you know, a little bit harder time, you know, some positive encouragement. And S Corporation is definitely bring us into this safe place. Now, going back to the IRS. So IRS just announced, you know, a couple of days ago, some statistics, and the fact that IRS is really in a hard position at the moment from audit perspective. Their offices were shut down and quarantined, and people have been isolated and won't be able to work. So the IRS is really backlogged at the moment. You know, just announced like crazy 20 million pieces of mail, you know, still haven't opened. But for our discussion is that IRS is a partner to the game. We cannot ignore the IRS. We respect the rules and we want to follow the rules. This is why when people ask me about expenses, I said expenses is relatively is a side discussion here, because you only need to expense what is reasonable and only what is business expenses. And this is why we definitely speak about audit. Audit is part of our life, and the idea is that audit rates are less in an S corporation because you take yourself from the personal system where you file your 1040 and your Schedule C, and you move yourself into the corporate system. So now your S corporation is competing on an audit, because every day the IRS has limited resources who they can audit. You're competing with larger corporations, usually bigger than you. When you're making this 150, 250, $300,000, $500,000 a year as an S corporation, you're competing with corporations that are making millions of dollars, and usually this is the target the IRS is going after. So if you didn't buy in for the tax savings, and you didn't buy in that you need benefit and well-being, at least the move to the S corporation will reduce, the stress and the anxiety. And the discussion with Monix, one of our clients, was about, the peace of mind that Formations is providing him by knowing that, we just took away this level of anxiety that people need to interact with the system, and part of the system is the IRS. So again, remember, a move to an S corporation can reduce your chances to get audited by 10 times than a single member LLC and Schedule C. So we covered, some of the best, reasons why to be an S corporation. So again, the 5 is the tax savings, keep more money in your pocket, the benefit, giving you just well-being and more money in the pocket for the future and savings, and just taking care of you as a business owner. The limited liability protection, again, the credibility and the audit risk. This is 5 things that as a business owner myself, really, really important for me. And if it's important for me, I want to make sure that, I pass it to all of you and make it really important for you. Now, we're dealing with a lot of clients, and our clients is in a different, economic status. We see literally people that just started, and making $20,000, and the following year 80, and boom, 300. And we're getting in these top producers because they believe the top producer mindset. There is something about it, the mindset of success. They figure it out. I can tell you that in the top producers market, in every industry, the top producers already figure it out. Most of them are S corporations. You see the ratio upside down, 90-10. 90% of them already been an S corporation, and 10% basically haven't figured it out yet. While we see a lot of the mid, kind of self-employed market in the 90%, 10% maybe figure it out to be an S corporation, and 90 are still, trying to. So again, if top producers figure it out, you should figure it out, because each and one of you can be a top producer tomorrow. Because again, as a self-employed, you create your own reality. We never know what tomorrow will bring. This is why I'm so excited, to open up my day and say, hey, how many clients will come today? How many sales will do? How many, people will we impact? And therefore, again, this is the excitement that brings us to be a successful entrepreneurs. So for everyone that actually become an S Corp, we always get these questions, why there is a reason why not to do it. And usually, if LLC suck, self-employed are full of excuses. So the excuses, usually it's yourself. I wake up in the morning and I'm giving myself an excuse why not to do something. I'm walking, with a philosophy that if you start something, you need to finish. If you went to sleep, you're not done sleeping until you're not making up your bed. So this is kind of the theory behind self-employed. If we're not creating for ourselves, nothing comes. And this is where we are lacking sometimes. This is where we need the level of accountability. But unfortunately, again, we're full of excuses. So people tell me that it costs too much, or it's too complicated, or they have some other things to do. I can always show you, the opposite. It doesn't cost too much. At the end of the day, it will save you money. The move to an S corporation, even if it costs you $350 a month, to manage it, at the end of the day, you'll pick up, another $1,000 in your pocket just because S Corporation will put you in a better financial shape. It's too complicated. Great, get someone else to do it. Someone can manage for you something. Selling a real estate or be a technology freelance or marketing, this is complicated. I don't know how to do it. But when I need to sell my properties, I have no doubt I'm going to a real estate agent, or to a provider to help me to sell it. Why, when it comes to your financials, self-employed believe that they can manage their own back office. So everything can be managed for you. And the idea of formations is not a do-it-yourself software. It's a platform that once you engage, we take all of this hassle from you, allow you basically to do all of these other things that you need to do. But too many things that you need to do, this is in your business. The time is now. Go in front of your business and make sure that what you do is sell. Because if you're on the $150 to $200 an hour, person, when you spend 10 hours, 15 hours, 20 hours a year on your books or your financials, you just lost thousands of dollars, not basically selling and being in front of the business with your clients, customer service, referral, center of influence, doing everything that we self-employed need to do on an annual basis, on a weekly basis, on a daily basis to build our funnel, to build basically, our next client generation. So I think that we are definitely in time for some quick questions, and then Brian, I know that again the topic about S Corps and LLC comes, I see, through the Q&A. Maybe you can walk us through some questions that are more often coming our way.
Yeah, absolutely. It definitely is confusing for a lot of people, and that's why we're here to help you. The LLC is your legal entity, right? So this is your documents of incorporation, your agreement with the state to do business in the state, and what's going on inside of your legal structure. The S Corp is all about taxes. So this is just how is the IRS is going to see you, depending on your state, how will California or New Jersey see you as an entity. And it just benefits you from getting the lower taxes and being able to take the reasonable compensation out, which is really giving you the leverage for retirement options and all of those things. So you want to think about it two ways. You have your legal structure and your taxation structure, and that's what the S Corp is for you. Then when we get into, is it complicated to transition? I know Shahar already touched on this a little bit, but no, it's not. So it's just a simple form that's filled out. If you happen to not do it on time, it's a few more pages of the form, but we can help you with this really easily. And finally, why is it suggested to have an LLC with an S Corp versus a C Corp? And so this is a really complex question, but to simplify it, a C Corp has double taxation, so both the entity is taxed as well as the dividends that are distributed. In addition to that, there's a lot of legal requirements to be a C Corp. So when you're a C Corp, an actual C Corp where there's stock ownership at different levels, you need to have board meetings and you need to have all of these reporting things. Are you still a real entity? And so if you go into that level, there's a compliance piece there that's just not necessary for most of our service providers, which is who's on this call. So we recommend the LLC because it gives you a lot of flexibility. You can make your choices later, and the regulatory requirements on top of a LLC versus a C Corp are significantly different.
And when people ask me about complication, I say, how complicated it is to give someone else to do for you something, you just ask. So I know Aaron is doing an amazing job answering the Q&A module, but Aaron, what do you think about this next set of questions? Because I saw some discussion about my income is fluctuate. Yeah. I'm not certain about it. And therefore, when I make more money, I pay more taxes. So how do we go through some of those questions?
Sure. So yeah, the first question that we get kind of regularly is, what is reasonable compensation? What does that actually mean? And it's a sliding scale depending on what industry you're in, what type of income you have. But generally speaking, if you're sitting around 40% of your net income as payroll to yourself, then you're considering basically reasonably compensating yourself. So that's usually where we like to keep things. That's the too long didn't read version of it. So depending on how much your income actually is, that will also increase or decrease what is considered a reasonable compensation. The goal, in the most part, is to compensate yourself the same way that you would get on the open market as a W-2 employee with someone else. But sometimes it takes a few years to get to that spot. So we stick with the minimum at least. And then, yeah, with taking money out of your S Corp, yes, in several ways, actually. The first, of course, being payroll, because we have to pay payroll anyway, so that's a good way to do it. But the next way is just as distributions of your equities. So as you accumulate money in your S Corp, and some of it is staying there, some of it's coming out as wages, you're paying tax basically on the net income every year. So when you've paid that tax, what you pull out later is tax-free, just like an owner draw. So you can pull your money out that way or via payroll. And can I put personal funds into my corporate account if my funds are low? Absolutely, yes. The great thing about the LLC that Brian brought up earlier is the flexibility of it. You don't need to have minutes, or you don't need like a chairman of the board or anything like that. If you need money in the company, you can put it in as a contribution. And if you need money out, you can pull it out later as a distribution.
So again, what I hear in general is that LLC file as an S Corp. It's a very flexible entity. I can employ, kids, in certain age, if they're helping. I can employ spouse or someone in my family. I can take less income if I make a little bit less this year. I can take more wage, if I make more. I can start an S corporation today. I can go back a year. The idea is that although there's personal circumstances for each and one of us, I think that in general, again, if you decided to be a self-employed by definition, if this is your lifestyle, I think that S corporation can benefit you regardless. And this is in a way why we started Formations. We started Formations because we believe that the information that we have and the knowledge that we acquired around how to manage whatever business, as a self-employed you run, we believe that the S corporation, the Formations solution can benefit you. We guarantee, again, that S corporation will save you tax. We guarantee you that you'll get access to way better, benefit that you've been using at the moment. We guarantee you that you will have an expert, someone in our system. Aaron's team, Brian's team are amazingly designed for customer service and to answer questions. And we are there for you 24/7. As majority of our solution, it's a software and technology solution. We don't want you to go to sleep with an IRS question, or we don't want you to go to sleep with a financial distress just because it's not a good night's sleep. We need you to sleep well, to wake up in the morning super energized and basically take care of your business. So how do you take care of your business? Just in a quick summary, So we incorporate an LLC. You need to go and open an LLC, file for the S selection. It's a one form that converts your LLC into an S. Simple. Someone else can do it for you. Then open a business bank account. Between your traditional banking in Wells Fargo and Chase and Bank of America, Formations is partnering with online banking like Aslo and Relay that you don't need even to move out of your chair. There is solutions today that allow you to open bank accounts remotely online once the business is open. Once the bank account is open, once you let your employer, your vendor, your broker know that you should start generating this W-9, 1099 income into the business bank account, we define your reasonable wage. We will help you to define your reasonable wage, this magic number, $40, $50, $60, $70, $80,000 that will go on your W-2. We will pay it for you every month, every quarter, to make sure that you have a steady paycheck based on your income. And your income was lower, the paycheck will be lower. If the income comes higher, the revenue, we will make higher W-2 pay stub for you, and then we will help you to choose your benefits. Again, the 401k, HSA, FSA, and I told you this is a little bit technical, but it's coming back and again and again and again. And the 5 things that we always repeat, in the discussion is know your revenue, know how much money you make, what is not an income, reimbursement from Amazon and some other people that paying into your business account is not a revenue. Again, control your expenses. This is a tax-free mechanism. What is an expense? What is not an expense? How you separate business expenses from personal expenses. The payroll is not scary anymore. It's a great enabler for, as we mentioned before, for your loan or refinancing to allow you to get into 401k and some other benefits. Design your benefits. If corporate America is going with 401k, don't go with SEP IRA. If Bill Gates and Jeff Bezos was thinking that SEP IRA is best for their employees, they will provide them SEP IRA. But all corporate America, 100%, decided to go with 401k. So you, as self-employed, go with 401k, and then the distribution, as Aaron mentioned, this is, your FICA free. This is the taxes, this is the distribution that you don't pay the self-employment taxes. This is the cheapest way to get money out of your corporation, which at the end of the day, again, we will guarantee you that you'll pay less taxes in a more legal way and take home more money of your hard-earned revenue. So, I think we have a couple of minutes left. I just want to make sure that, one, you understand that even if you pay someone to do all of these magical, business operation for you, you should keep more money in your pocket. The tax savings, the benefits, and, how much it will cost to maintain your services as an S corporation should, in average, give you over $10,000 in your pocket. And if you don't believe this is what our offering for you today, we're offering you one, contact us for free, 30 minutes consultation with Aaron, with Brian, with myself. We will analyze your taxes. We'll show you 2019 if you haven't filed yet, and we'll help you to see how much money we can save you. So contact us for this, free consultation. And on top of that, because there is a cost to incorporate S corporation or open up the LLC in the state, we will waive, the incorporation fee if you'll enroll to the formation services by July 25th, which is about $1,000 worth of, incorporating, paying the state fees and catch up on the first 6 months of the year. So apply today to discuss with us. I think we have an amazing value proposition for all of you. And I'm sure, I had a lot of fun in the last 54 minutes. So I hope you have you had a really entertaining, an hour. We definitely want you to stay and ask more questions. So Uri, I know that you have lots of questions to go. Can we use this next 5 minutes just to entertain more of those?
Yeah, absolutely. We had a lot of questions come in, and some of them were answered personally on the chat and on the Q&A module. Let me pick up a few because I think they might be beneficial for everyone on the webinar.
And I know that at the end of the Q&A, you have a few announcements also about our next webinar. So we just encourage people just to stay. Maybe we'll kind of steal, a couple of minutes of the hour, but there's some few announcements. So I want people just to get there, address the question, but also a few very important announcements in the next 5 minutes.
Yeah, and I think primarily one of the first questions were, and I think you answered a lot of it, is to understand the differences between LLC, partnerships, S Corp, C Corp, all of these terms that explain a legal entity versus a tax entity. I think Brian did a good job answering that. So if someone has more questions about those differences, we have some content on our website, but we can also answer them personally in a, as Shal mentioned, in a consultation session, a 30-minute consultation service session. I'm sorry. We talked a little bit about the S Corp, the late election S Corp that came up as a question. And I think there were a few questions about taxation. Specifically, Aaron, answer them. Aaron, maybe you can answer some of those questions again about how are the different mechanisms being taxed from the S Corp? How is payroll tax? How is distribution
Sure.
tax?
Yeah, that was it's a complicated situation when you lay it all out, but really what it comes down to is a couple of pretty simple bullet points. So there's a couple different ways taxes are levied on your S Corp. The first and probably the most primary is your payroll taxes. So as an officer of the company, you're taking payroll, you're contributing federal income tax through your wages, and half of the necessary Social Security and Medicare taxes that you normally do as a W-2 employee. The other half of those Social Security and Medicare are your company's, half of it essentially. So that's the tax that your company's paying. Then the other side of the taxes doesn't really come other than, say, your state excise or B&O taxes. The other side of that is what you pay on the income from your company. So S Corp is a pass-through entity. So the net income at the end of the year essentially moves from the S Corp to your 1040, your personal return, and then you pay qualified business tax on that amount. So it's not taxed the same as, say, a sole proprietor would on a Schedule C, which would pay self-employment tax, plus their federal income tax requirements as well. So merely by moving from an LLC to an S Corp, you shift basically what you're getting taxed and how you're being taxed just by doing that, which is why the savings are so incredible once you actually ramp it up and start using it.
One more question that we had, and I think it's an interesting one. We've had similar questions in the past is, what happens if my business loses money in a certain year? What should I do then? And maybe, Shah, maybe you can start and Brian can help as well.
Again, there is no guarantee that your business will always be super profitable. Again, we're getting into some tough times, recession. You may be in an industry that is losing some momentum. We're getting into some things that are not in our control. But the idea is that if you believe again in yourself, you believe in your business, and you trust the system, this should be like a one-off. So a one-off year that lose money. Again, you can lose money as a sole prop, as a LLC or as an S corporation. In a way, the loss will be the same. You can deduct the loss, again taxes. You can maybe even go backwards, with something called net operating loss and carry those losses back. But the idea is about the positivity. The idea is about, if you're a constant business owner that lose money, again, challenge yourself why you are in business, But the idea is that one-offs should not represent, the normal life of a self-employed who should be profitable. And when you are profitable, you should be an S corporation to mitigate your tax liability and get yourself exposed to an amazing benefits.
I want to be sensitive to our audience's time, so I'm going to stop with the questions right now. We're going to try and answer a lot of these on our blog as well. There's a lot of content on our blog that answers a lot of these questions. So first of all, thank you for your time today. We appreciate you spending an hour with us. We're going to follow up with an email to the recorded webinar so you can view it again if needed, as well with a link to the presentation with all the links in the presentation inside. As you leave our webinar today, there's a short survey, a really short survey for your feedback so we can learn more about how we can get better. As Shahal mentioned before, please schedule a free call to learn more about formations, how we can help with all of this and make your lives much easier, your business lives much easier, and help you with your financial well-being. A lot of these webinars are on our YouTube channel, so you can consume a lot of the content also via our YouTube channel. And then lastly, if you enjoy this webinar, please recommend to one of your colleagues. You can also join us next week on the same topic to learn more about S Corp and how to move to an S Corp and the huge benefits that S Corp has. Please enjoy the rest of your day. Thank you again for spending an hour with us. And thank you, Shaha, Aaron, and Brian, for this webinar.
Appreciate it, Roy. Hey, it's again Q3. Go get some business. You know, it's this is what we need to do.
Have a good one, everyone.